Hi, everyone. We had the FOMC statement today, and based on everything that I see in today's action, it's inconclusive. And in fact, I would say that today's action is not that good. So, what we're looking at the NASDAQ here, where we have already a broadening formation. And if you don't know what that is, it looks like this. It's whenever your price action starts to get wider and wider and wider. If you want to see what happens during a broadening formation, you can kind of see right here. Oops, wrong one. You can see what happens. You eventually break down below it and then you move lower. But broadening formations are never good overall. They're always a sign of something that just isn't necessarily the most bullish. You can see here it was more of a steady uptrend. Then, of course, over here, once again, we start to get a kind of a not really broadening, but once again, another kind of like weird formation, and then you have this more rollover type. So these patterns are not that good and normally don't resolve themselves higher, and in fact resolve themselves lower and or lead to more choppy markets. So I'm not bullish after today's price action, especially the reversal off the highs in the NASDAQ. Same can be said for the S&P 500. Same thing here. Once again, let me just go ahead and show you like the broadening formation and then what happens with it. You can see here, once again, another broadening formation, and it resolved itself lower before eventually moving higher again. So it's just not a sign necessarily of a healthy market when you see these little patterns. And so it's just right here, it's kind of going the other end, but it's still there. You have this here, and then you can see we're getting a little wide here. It's not picture perfect, but it's a reckless pattern. It's an indication of a reckless pattern. And once again, S&P 500, good day intraday, but it can't finish near the highs. And the fact that it's not closing above the 2007 level means that we're not under a buy signal with this index either. So there continues to be more time that needs to be spent, I guess, digesting these recent games. But I'm never a big fan of this. I'm never a big fan of these like broadening formations. It's just not something I've ever known to. Once you see those, you get a breakout and then the market just rallies higher. It just doesn't happen normally. It's indicative of something isn't right. And another thing that isn't right is that despite the reversals, across the market, the Russell 2000, it also reversed off its highs. It didn't lead today, didn't show any extreme outperformance. So until I see that index lead, that's another hint that something's wrong. And even though the Fed states that the interest rates aren't going to rise, look at what the dollar did today. The dollar took the FOMC statement as indicated that, hey, I don't care what you say, rate hikes are going to be coming sooner than they're even indicating right now in their statement. So I don't know necessarily what was in that statement. I've been surfing all day. We still have a massive, amazing south swell 3 days in a row. Well overhead to sometimes double overhead waves. That's my concern right now since long positions aren't killing it. With all the long signals that we just had, if this market was right, the ones that came early for us would have already had huge gains like ENPH. ENPH is like, it's not even doing right. ENPH, for instance, now is only up 40%. I know it's 1 month and only 40%, but this is like my best performing stock, and it's already shaken me out because of this day right back here where I went ahead and started to do a mass sell out of everything just because something just doesn't feel right here. So ENPH is only up 40%, not even up 50% in 1 month. That's not indicative of the kind of big gains that we used to get in speculative stocks and real good uptrends, and in fact is actually weaker than 2013. We're just not seeing stocks trend higher like ENPH. Unfortunately, we're having more action like CBPO. Thankfully, I used the limit order around the 55 level, so my loss is way smaller than even this is. But CBPO is closing below the open of yesterday's signal date, 54.41. That's my first cut loss level, so 50% of this stock is off. The rest will come off if it closes below 52.64. I will not hold any more of the stock, especially with it selling off today on above average volume and it losing its green bop. It looks like it wants to immediately fail and put in a possible short-term double top. So that's the only sell that we have. And while that one did bad, we did have a new long do great. NVGS. So I love that I got shaken out of this because if the first day holds true, we now have a 4% gain. But unfortunately, we decided to have this day happen. And because of this day, I probably, hindsight, Man, the market looked really bad after that day, though, I have to admit. Even though this is a New York Stock Exchange stock, that breakdown was pretty bad overall in the market. I don't feel bad about what I did. I had to do what I did and protect capital. But anyway, it didn't close below 29.50, which was our signal date, and my technical first cut loss area. Closed at 29.70 is bullish. I probably should have sold 75% of it in hindsight, trading out of fear once again, not trading out of discipline. Should have been a 50-75% sell, still holding all my final cut loss levels. And on top of that, it was still trending above the 20-day moving average and at the 10-day moving average. So really no excuse to be fully out of it. Got another re-entry signal, but figured, hey, don't want to pay up from the last time, so 30.25 will be good. So let's pretend like I don't do 30.25 and I do 30.52, which is what I always do. Or let's say I do 30.53, I still don't get filled because it opens at 30.57, which is a high day yesterday. So let's say I do the high day at 30.57. Chances are I still don't get filled, and it just goes past the limit and keeps running. That's what happened to TSEM initially, but feels foolish now. Yesterday, this is where now we need to start doing something. So when you have a chart pattern that's this bullish, so the other chart patterns weren't necessarily as bullish. GII, you look at it, CBPO, they're not as green as NVGS, but NVGS is kind of some more speculative, thinner stock. So what you want to do here, split your orders up. When you have low commissions like me, whenever you're putting 4 figures into it, $1 commission or $2 commission doesn't hurt to split your order up into a market order and then a limit order. If that would have been the case, at least I would have had some of it, and the NVGS fill would have made up for some of those losses that I took whenever we went ahead and got rid of our position after the 15th. So kind of tricky trading out there. But ILMN is a new signal again. Should I be all out of it? No, probably not. Probably shouldn't fully sold out of ILM on the 15th either. Once again, hindsight bias is quite clear. This was the signal date back here, and we only had small gains, and based on the look of relative strength line, TSV line, MACD line, I thought we were pretty much screwed. Still don't look that good, but we are producing a pocket pivot point signal above the 50-day moving average. If it closes below 173.21, I know I'm wrong and I'm completely out, so I only risk right around 2% or 2.5% if I am wrong. But ILMN is going to be 2.5% position, limit orders only. And then Taro, once again, another stock that shook me out, except for this one I don't mind. Taro immediately didn't move up higher, it was fine, then started not move higher immediately, 50%, but by this day, 151.34 close is below the 152.11 open, low a day, it's a full sell. The fact that it bounced back, nothing you can do about that. But now we get another signal date. If this one works, great. If it doesn't work, yeah, I do risk 5%, but ultimately the ultimate cut loss level, but your first cut loss level can be the 156.67 or 155.81 level. This too will be 2.5%, and once again, my internals are not lined up, so if it fails, it won't shock me. If you're a new investor, I stress this on my new positions page that you should read every night or every morning before the opening bell. It's not the time to be trading. You should be sitting in heavy cash, and you should just ignore these signals and watch them either maybe work a little bit or fail. I take them just because whenever I don't take signals, even though I did take this one, it just didn't get filled, this is what happens. So I take all my signals because it doesn't cost much. 2.5% isn't like I'm putting 20% of my account capital per signal. Those days, I swear to God, guys, they're going to come again. There's going to come a day again that I push hard and heavy, but it isn't today. Thank you.